Thank you, Justin. I think my position as the last speaker before dinner and a long day makes it incumbent upon me to try to highlight just a few key themes and then hopefully leave a few minutes for Q&A. First, however, I do want to take the time to thank George Soros for his inspiration in bringing this together and Rob Johnson for his leadership and organization. I spend a lot of time, as I know many of you do, thinking about these issues, but much of our thinking is within institutionalized frameworks, whether they be banking sector frameworks, public policy frameworks, academic frameworks. And I think that today's program, beginning with last night, gives us a sense of intellectual fertility, which I think is crucial to really finding some solutions to these difficult problems. I'll begin to address global architectural issues from the premise that we have still not learned an important, I would say, the crucial lesson from the crisis of the last few years, that it is a global crisis and we can only find meaningful, lasting solutions through adaptations in global architecture. I think that we are reluctant to do that because we have been captured by the notion of sovereignty. It's inevitable, and we as economists do not tend to challenge this political context of sovereignty in our theories or in our analytical work, nor do we in the ordinary course of our policymaking or private sector endeavors. And yet it seems to me rather obvious that this is a wonderful time for us to step back and ask, do we need to consider major adaptations to the existing global institutions or consider the creation of new ones? Now, anyone among us who has spent much time working in a multilateral institution approaches this concept with considerable trepidation, because these institutions do tend to create their own bureaucratic momentum, which at times seems divorced from global realities. And I spent 5 years on the board of the IMF. And yet I think we have little choice, really, to consider some profound adaptations and additions. And let me just focus on a key couple of thoughts here. First, global regulation, global supervision, and global risk management. And I would identify each of those three because I don't think I've hardly heard the notion of supervision debated very much, either from a theoretical or a practical operational perspective today. But it is a rather distinct field related to, but somewhat separate from the business of global regulation, and one that is grossly underattended today. You will find many ideas about strengthening global regulation. You will find many ideas, fortunately, underway about how to improve risk management and governance in institutions. Where are the lessons to be learned and the major proposals to strengthen global supervision? Because framework of regulation is one thing. Actually engaging in supervising financial institutions in the conduct of their business is another thing. And in my view, the shortcomings there were equally serious. Of course, I spend a great deal of time working with financial institutions whose own shortcomings in risk management and governance were profound. And the correction of those needs to be at the essence of what we do. But if we do not embed this in a broader framework of institutionalizing a global context of strengthening, harmonizing, and insisting upon a level playing field for supervision and regulation of global financial institutions, and I'm afraid we would have missed a major opportunity. Of course, there are steps underway. There was the transformation of the Global Stability Forum to a Global Stability Board. There is the creation of the G20. There are the edicts emerging from the G20 about global coordination. But the reality is that we are actually engaged, in my view, in a tug-of-war right now between framing and pursuing global solutions or going our own way down national paths. And I think this was most vividly demonstrated when President Obama hosted a summit in Pittsburgh last fall, where he pledged, along with 19 other global leaders, that we will find globally coordinated solutions to regulation and global macro policies. Less than 3 months later, he was launching 2 national initiatives in the banking sector, a bank levy and the Volcker proposal, with virtually no sense of global coordination. And he's not alone. I'm not trying to single him out, but I do think we don't have to look very far to find global political leaders who are now drifting away from this fundamental commitment to global coordination. I think it is inevitable that at some point we will come to the realization that we need a global treaty for financial services, and we need a new global institution to manage the regulatory, supervisory, and risk management framework. And I think we should be doing some much bolder, more ambitious, visionary thinking at this time, rather than just taking small steps of transforming the global financial forum to Global Stability Forum to Global Stability Board. Crucial problems will not be easily solved in the absence of this. Jacques de la Rosière, when he presented a proposal to Europe somewhat over a year ago, I think, contained in that proposal the notion of a global treaty. Now, it has not advanced very far, and I doubt that it will at this time. But I think if we're talking about institution building, if we're talking really about architecture, we need to think seriously about this concept. Because in the absence of it, I'm afraid that a lot of what will happen will be pulled apart over time in a fragmented way by national political short-term interest as well as market forces. The issue of too big to fail is one of the most difficult I've ever encountered in my career. But I am convinced that one essential ingredient of moving toward a path of walking away from that problem, of solving the problem, is cross-border resolution regime. Is anyone now really ambitiously proposing that we unify our bankruptcy or resolution laws in the key jurisdictions to create a harmonious framework for putting to bed a sick financial institution in a way that does not rip apart the global system? Why aren't we looking more ambitiously in this direction is one piece of the problem. I submit to you that if we had the lack of coordination in global air traffic control that we do in global finance, that we would be having a dozen plane accidents a day and we would not stand for it. Last year, during the depth of the recession, and this went on for months, not days, we destroyed the equivalent of a medium-sized city every day in terms of employment. 150,000 jobs a day disappeared from the face of the earth for months. That's pretty profound when you put it in those human terms, and I think it underscores the need for us to find global approaches here. And in this respect, I perhaps differ somewhat from those who say we have seen these crises before. Certainly we have seen national crises which have many of these ingredients, but have we seen in modern recorded financial and economic and political history anything that was so global and so synchronized? The Great Recession was by no means a synchronized phenomena. This has been, partly because of, I think, the notions that George Soros and Bill White mentioned earlier today, that we have been building elements of a bubble for decades now, and with each effort to deal with them, we left residue. We left problems. I did my dissertation on the global balance of payments adjustment after the first oil price shock in the early 70s. It was pretty clear that whatever was the right balance between adjusting to that shock and financing it, we didn't find it. We provided too much financing, and we planted the seeds of the debt crisis of the 80s, so on and so on and so on. There's another dimension that I'd like to stress right now, and this will be my final thrust, which picks up really on some of Helene's ideas of how do we provide a much more meaningful framework for global coordination of macroeconomic and exchange rate policies. The IMF has failed us in providing a meaningful framework for influencing policies in major industrial or emerging market economies. For years, I sat on the board of the IMF defending U.S. fiscal monetary exchange rate policy, and this was in the early 1980s when it was not always easy to do so. The IMF engaged very professionally in Article 4 consultations, which were promptly dismissed by U.S. authorities. I once got so frustrated by the process that I went to my boss at the time, Treasury Secretary Brady, And I insisted that we have a cabinet meeting on an Article 4 report of the IMF. Well, that was a bizarre idea, he thought. But after we talked it through, we actually did have a cabinet meeting, a full cabinet meeting chaired by President Reagan on the Article 4 consultation results, particularly on the fiscal front. Now, I doubt that much was accomplished there, although I felt better walking out of that cabinet meeting because the opportunity was there for the views of the fund to be heard. But they were then and they are today so easily dismissed because we have no framework, or we have not nurtured and developed the framework. It is there, somewhat embedded in Article 4 of the IMF Articles of Agreement. But why are we not stepping back and asking ourselves, do we need to amend the Articles of the IMF to create a more meaningful, effective way of containing the inevitable lack of discipline that happens in the United States and will, I'm afraid, potentially happen in China and other emerging market countries in the absence of anything other than market pressures, which we know, instead of being the proverbial too little too late, are too much too late. We have ample experience in the last 40 years to know that when market pressures build on a country's macro sustainabilities, that it becomes very difficult to manage it without disruption to the underlying economy. We see that today with Greece. We saw it in Mexico in 95. We saw it in Canada in 92. We saw it in this country in 76. And we will continue to see it without a more explicit set of constraints around the U.S. and the other big economies globally. I have some other thoughts about markets, but I think we should move into the question and answer period. Thank you very much for your time.